Okay, so we are continuing with question 1. The goodwill. Yeah, I will restart explaining at goodwill. So I said that there are 2 different ways of recording goodwill. Yeah, take note of that. 2 ways of recording goodwill. Sometimes you'll be told that goodwill is to appear in the books of the new partnership. And sometimes you'll be told that goodwill is not to appear in the books of the new partnership. Okay, this is what you do. When goodwill is to appear in the books of the new partnership, when it is to appear in the books of the new partnership, first thing you do is you first share it among the old partners using the old profit sharing ratio. That is the first thing on the credit side. And then again, you go on the debit side, then you share the new goodwill among the 2 partners, or among the new partners, the remaining partners on the debit side. So you will have 2 goodwills, one in the old profit sharing ratio on the credit side, and the other one in the new profit sharing ratio on the debit side. That is when goodwill is to appear in the books of the new partnership. When goodwill is not to appear in the books of the new partnership, you will have to share it among the old partnership, among the partners on the credit side. Remember, goodwill is an intangible asset. Ne? It's an asset. So you need to, it's an asset and it increases your capital account. So you are sharing that asset among yourselves. You understand? Therefore, when it is not to appear in the books of the new partnership, you need to share it among the old partnership, among the 3 partners, according to their profit sharing ratio. Now, in this case, you are told that goodwill, we are told that goodwill is 50,000, is estimated at 50,000, but should not be recorded in the books of the new partnership, meaning that it should not appear in the books of the new partnership. Therefore, we need to share it among the partners, get rid of it. In other words, we need to close off our goodwill account. We do not need it anymore. Ne? So we need to credit our capital account using the profit sharing ratio. So 50,000, we multiplied 50,000 multiplied by 5 over 10 for Abraham will get 25,000. Do we understand now?
Yes.
Do we understand?
Yes. Yes.
Okay. So let's move on to Boaz. How much will Boaz get?
10,000.
So Boaz will get 10,000. And then Carlos will get how much?
15,000.
15,000, which is 50,000 multiplied by 3 over. And please, if you do not understand, remember you'll be writing exams, and if you do not understand, please just ask. Okay. Now that we recorded goodwill, we move on to the next. We move on to the next additional information. Okay. So the next additional information says all reserves must be written back. All reserves must be written back, meaning that they should not appear in the books of the, meaning that they should be shared among the partners. Ne? we need to share the reserves among the partners. Remember that the retiring partner was also part of the partnership. He also needs to benefit, ne? So we need to share all the reserves among the partners. Reserve, this is the profit that you keep aside. Remember that when you are in partnership, the profit that you get, remember we said that we share all profits among ourselves. So it doesn't mean that if you are in a partnership, if your profit is 10,000, then you have to share the whole 10,000. What you do is there is an amount that you keep aside. Let me say, okay, your profit is 10,000. So you decide that, okay, 2,000 we'll keep aside in the business. It will stay in the business. Then we share the 8,000. So that 2,000 is the reserve. They can be general reserve, they can be revaluation reserve. We have different kind of reserves. Are we together? So reserves are profit, and when we share profits, they are recorded on the credit side. Do we understand? Okay. So we move on. Now let's record how many reserves do we have there?
2. We have 2.
Okay, just hold on. Just give me a minute quickly. Okay. So we have 2. The first one in this case is we have a replacement reserve. So replacement reserve is how much? 20,000. So Abraham will get obviously the half. Abraham will get 10,000. How much will Boaz get? How much will Boaz get? 20,000 multiplied by 2/10.
4,000.
4,000. And then 6,000. And again, the same applies to reserve. If you are told that reserve is to appear in the books of the new partnership, let me say you are told that 50,000 reserve is to appear in the books of the new partnership. What you do is you go on the debtor side, and then you share the 50,000 among the remaining partners. That is when you are told that reserve is to appear in the books of the new partnership. For example, okay, 50,000 reserve is to appear in the books of the new partnership. So you go on the debtor side and then you share your reserve among the remaining partners without considering the retiring partner, because he won't be part of the new partnership anymore. Are we together? Okay, so we move on to the general reserve. Okay, so general reserve, how much will Abraham get? General reserve is 15,000. So obviously, Abraham will get 7,500, ne? How for 15,000?
7,500.
How much will Boaz get?
3,000.
10,000.
3.
Oh, 3,000. And then
4,000 for Carlos. 4.5.
4,500. Do we understand? Do you have any questions regarding the reserves? Any questions?
Can there be a situation where like you first apportion them to the first 3 partners and then you apportion them to the remaining partners on the debit side?
Yes, that is when you are told that general reserves are to appear in the books of the new partnership.
But first you apportion them to the first 3 partners.
Yes, first you need to apportion them at the first 3 partners. Why? Because the retiring partner has to benefit from those reserves. He has been in the business, so he needs to get his share of the profit of the general reserve profit. Ne? That's why we share them among the old partners. And then now those, because it is to go back, because it's to because it is to appear in the books of the new partnership, the remaining partners will have to pay a certain amount. They will have to pay back the reserve. They'll have to pay back the reserve, so it goes back in the business. Let me give an example. Let me say there's 10,000 profit, ne? So the retiring partner needs to get his share of the 10,000. But because it is because that 10,000 is to appear in the books of the new partnership, first you share so that you make sure that the retiring partner gets his profit, and then from there the new partners will have to pay according to their profit sharing ratio. They have to pay back that 10,000 so that the 10,000 comes back again in the business. Do you understand?
Yes.
That's why it goes on the debit side.
All right.
Any questions? Okay. So we move on. We move on to the next additional information. What is it saying?
The new profit sharing ratio for Abraham and Boaz is 1:1.
Okay. So in that case, okay. So sorry guys, I was actually quickly searching for the meaning of written back, because I kind of got confused with the meaning of written back. When something is being written back, that means it needs to appear in the new books or what? Kind of searching for that. And I want to give us a definition of written back. Anyone that knows what written back is, to please help us.
What is?
The meaning of written back, like to write back. Write off and write back. Okay, let me see. I was quickly busy searching for it. We have write off and written back. Because I kind of feel like when it says to write back, meaning it's to appear in the books of the new, like you bring it back to the books of the new partners. Yes. Okay, I got the definition. It says according to the difference between write off and written back. So written back means taking into account again the asset or liability earlier written off. So we need to take into account the liability that was earlier written off. Meaning that in this case, written back simply means that you need to you need to write it back, or you need to show it in the books of the new partnership. Are you guys getting me?
Yeah.
Huh? Because it says the definition says written back, it means to take reverse of what was written off. So the general reserve first, we write them off. All the reserves, we write them off because the retiring partner needs to benefit from those reserves, and then again we write them back. Okay? So what in other words, they need to appear in the new books of the partnership. Therefore, we now need to share them among the remaining partners. And here we are given information that the remaining partners, what sharing ratio is 1:1. So it's 50%. So it's equal. So let's write back the replacement reserve. Okay, so according to this, Carlos is the one leaving, ne? Carlos is the one leaving. Therefore, we will have to share among Abraham and Boaz. The replacement reserve, so the replacement reserve was 20,000, ne? So if the replacement reserve was 20,000, for us to bring back that 20,000 back into the business, because now we wrote off the 20,000, since Carlos needs to get his share, which is 66,000, we now need to bring back their money into the business. We need to bring back that 20,000. You understand? So how much will Abraham and Boaz each give if their profit sharing ratio is 1:1? So each one will pay how much?
10,000.
So each one will pay 10,000. So replacement reserve 10,000 on Abraham and Boaz 10,000. And then again, we are told that all reserves should be written back. We have the other one, general reserve. Oh, am I doing general reserve? General reserve in total was 15,000, ne? 15,000, and then we wrote it off, or we closed it off into the three partners, so that Carlos get his share of the general reserve. However, we need to write it back. We need to show it on the new books of the partnership. Therefore, Abraham and Boaz will both give 7,500. So they bring back the 15,000 back into the business. 7,500. Do we all understand what it means to write back and how to record it?
Yes.
Okay. Martha, Alma, do you guys understand?
I think so.
Okay. So we said that when you are told that general reserve or goodwill should appear in the new books of the partnership, or in other words, should be written back. That means that the first thing you do is you share them among the old partners, so that the retiring partner should also benefit, ne? From the goodwill. He needs to get his share of the goodwill and also of the profits of the reserves. And then from there, you need to, again, now because they need to bring back the reserves. Now that the reserves or the profits were shared, however, they need to appear in the new books of the partnership. The remaining partners will need to pay, or the amount will be deducted from their account, so that they bring back the profits that was shared. That's why you again record it using the sharing ratio of the new partners. And it's on the debit side. Why? Because their partners are paying. money is being deducted from their account, so they pay back the reserves. So they put back the profits or the goodwill in the business.
Okay, it makes sense.
And then we continue to the last thing. The last thing is Carlos will receive 10,000 cash and the rest should be converted to a loan. Remember that Carlos account needs to be closed off. We need to pay Carlos, ne? So now we are balancing. So when we balance, we add the debit side the same way we balance of other ledger accounts. We add up we compare the sides. Abraham, if you have to compare Abraham's debit and credit, which side is big? Obviously the credit, right? Okay, so the
Yes.
credit is how much? Credit side is how much? What is the total on the credit side?
$995,000.
92,500.
92,000.
500.
Okay. So 92,500. Then Abraham, so you record the 92,000 on both sides of Abraham. 92,400. And then Boaz. Boaz obviously again.
139,000.
Huh?
139,000.
139,000. So on both sides we have 139,000. And then Carlos.
128,500. 28,500.
128,500. Okay. 128,500. So now this is what we need to do. So the remaining partners, we balance off their accounts. The retiring partner, we need to close off his account by paying him off. Now the instruction tells us that he will get 10,000, ne? So bank, he will receive 10,000. Bank of 10,000, that's what you will receive. And then the rest you are told that it should be transferred as a loan, kind of like he gave a loan to the partnership. It should be converted to a loan, meaning that the remaining will be converted to a loan. So if this is his total, 128,500, this is his total total balance, since we do not have any entries that falls under Carlos here. Ne? He is entitled to 128,500, and then we paid him 10,000. So how much will we convert to loan? 100 and what?
185,000.
118. I think 118,000. 128.
118,000.
Yeah, 118,500.
500.
Yes. So the 118,500 will converted to loan. Please remember that if we had entries here, if we had entries on the debit side, then you could have first balance off, then you check the remain. So 128,500, then you subtract the entries if there were any entries on the debit side of his account. And then from there, we just balance off. So we have balance brought down of the rest. Balance brought down, sorry, carried down of the rest of the partners. 92,400 minus 17,500 will give us how much? 92,500, I mean, sorry. 92,500. To give us how much?
75,000.
25.
75.
Okay, 75,000. And boss, 139 minus 27,500.
111,500.
111,000. Like this. And then from there, for every balance carried down, there should be a balance brought down. So you bring it down. I was actually trying to, I don't know how I should do this. I was trying to draw double lines. Yeah, I think it's like this. Yeah. I was actually struggling to draw the double lines. But I got it now. Yes. Okay, so you bring down the balance. So in this case, you have balance. Balance of Abraham is 75,000. And then of Boaz is 111,000. Now checking, Carlos has no balance. We closed off his account. Ne? And therefore we are done with our capital account. Are there any questions?
111, what? 500.
Oh, 111,500. Okay, thank you.
Yeah, for me.
Okay, are there any questions? Maybe a part that you still
Yeah.
did not get?
Yeah, but number one, the property has to be evaluated up to 200,000.
Mm-hmm.
And we got, how do you,
Okay.
calculations there?
Oh, okay. This is what you do. So,
10,000.
okay, your line is actually cutting, but I think I get your question. This is what you do. But you compare your property and the assets. Your property is 190,000. Ne? Your property is 190,000, and you are told that that is in the statement of financial position 190,000, and then you are told that you need to revalue your property to 200,000. So you need to calculate your profit. Obviously, if it was 190,000 and then you revalue to 200,000, you made a profit on the revaluation. You need now to calculate that profit on the revaluation, and that's the profit that you share among the partners. So 200,000 minus 190,000 will give you 10,000 profit on a revaluation.
Oh.
So that 10,000 profit on revaluation is what you share among the partners. So 10,000 for Abraham was 10,000 times 5/10. You got 5,000, Boaz got 2,000, and Carlos got 3,000. Do we understand now?
Yes.
Yes.
Okay. So that was it for question 1. Bring up a capital account. And then question 2. So with question 2, you are required still falling under partnership, but in this case it's a liquidation. Liquidation of partnership. You are required to draw your to prepare your bank account, your capital account, your realization account, and your Ltd's account? Oh, because they actually sold their account, they actually sold their partnership to Gentle Ltd. Okay, so let's quickly do that. Oh, please bear with me. I have an headache. What's happening? So let's quickly do that. Question 2. Then, you fine? Okay. Oh my head, guys. Question 2, this is the liquidation or dissolving of a partnership. You are selling off your partnership. Now, in this case, the partnership is actually not coming to an end. You are actually just selling it. Okay, so we are going to do these ledger accounts based on the information that we are given. Okay, before we start, can I quickly please just go drink water? I have a very terrible headache.
Okay.
Yeah,
Please go ahead.
just give me a minute, please.
Okay.
You can't be sleeping till this time. Wake up. Oh, I actually didn't stop the record. Okay, so we actually just have 2 minutes. We only have 2 minutes remaining. So I'll quickly just end the session and then restart it again. Yeah, instead of us continuing with the 2 minutes. Stop share. Okay, let me just stop share. I'll end the meeting.